The magic of MACD trading with ICT concepts. This video is for educational purposes only and should not be considered financial advice. The MACD indicator can be a useful tool to help you gain confidence in your ICT trading. ICT's concepts are difficult to see for new traders in real time. Since many of the new traders are familiar with retail trading tools, it helps to use them in conjunction with ICT concepts to aid in finding trade setups. The MACD has been a favorite among traders for years and has been proven to be accurate up to 70% of the time. By using ICT concepts alongside the MACD, traders can gain an even bigger edge in the market. In this video, we will show you how to find the real swing highs and lows using the MACD histogram, how to use MACD lines to find true displacement, and if you stick around until the end of the video, we will show you how to build directional bias using MACD divergence. MACD settings. The settings we use on the MACD are the ones recommended by John Carter. He is a well-known trader whose trading indicators such as the squeeze are available in many trading platforms. The settings are the fast EMA at a 3 period, the slow EMA at a 10 period, and the signal SMA at a 16 period. Finding swing highs and lows with MACD histogram. ICT's definition of a swing high is a candle that has two candles on each side that are lower, and his definition of a swing low is the opposite, a candle that has two candles on each side that are higher. Here is a way you can verify that there is a true swing high or low using the MACD histogram. When price makes a candle with two candles on each side that are lower, you can look at the MACD histogram and see if the histogram has 3 green bars. This will verify that it is a true swing high. If not, then it might be a fake out. When price really is going in that direction, the MACD histogram will turn green. You can use the same concept for swing lows. Here are some examples of how to stay in a trade even though it is going against you, and also how to wait for a trade using the MACD histogram. Here is an example of watching swing highs and swing lows form. You can see on this day there is a lot of messy price action, and it is probably a good idea not to trade in days like this because of the messy price action. But if you're still insistent upon trading, you can look for swing highs and swing lows. Here is a swing low confirmed by the MACD histogram as a red bar, and it fits ICT's criteria of a candle to the left and to the right that is higher. Then we see a swing high fitting ICT's definition, a candle to the left and to the right that is lower. And this is also confirmed by the green bars on the histogram. Here is a swing low and another swing high and a swing low. But to really see the usefulness of the MACD histogram, you have to look at what's going on with these other supposed swing highs. This could be called a swing high because it has a candle to the left and to the right that is lower. But if we look at the MACD histogram, there's only one green bar. It needs to have 3. Also, if we look at this one, it has a candle to the left that is lower, a candle to the right that is lower. But if we look on the MACD histogram, this bar is red. This is how you can tell which candles are actually true swing highs, or swing lows. You can see this swing low taken. It did not break below this swing low. It reversed and then went up past this order block. That would be your entry. When it came right back to 50% of this order block, you can enter there and look for this liquidity as a target. And as you see, price came back down and actually grabbed this liquidity. This next example shows the same idea of a swing high that is confirmed here. Then you see another swing high according to ICT concepts. It has a candle with a candle to the left and the right that is lower. But if we look at the MACD histogram, the bars are red. So this is a fake swing high. And we can see what happened right after this. Price took off to the downside. So this is the actual swing high. This is the fake swing high. And you can see there's a break of structure, then a retracement back into this order block. It did not reach the 50% of that order block, but it did reach the 50% of this breaker's wick. That could have been an entry. If you also measure this dealing range, you get 61% fib retracement here. This could be an optimal trade entry as well. Then price moved to the downside. Now here is where some traders might get out. But if you pay attention to the MACD histogram, you'll see on this retracement, there is no confirmation of a swing high. You only have one tiny green bar that's not even really visible. And it's basically red bars. That would give you confidence that the trend would continue lower. And as we have stated in our other video about using the 50 period moving average, you can see that this is the 20th candle right here, and that's somewhere where you could exit. Here is another example of a fake out. This bar has a very, very long wick, and you would think that there would be green on the MACD histogram, but it is not. The MACD histogram has one small green bar, and then the rest is red. That is your clue that this is a fake out. And as you see what happened to price, it tanked after that. Using MACD lines to find true displacement. The MACD lines can help you find when there is a true displacement of price, so you can begin to look for optimal trade entries, fair value gaps, or order block entries. To help you see when price has made a displacement, we include a zero line in our MACD indicator to differentiate between buy and sell conditions. When the main line crosses the signal line and goes above the zero line, that is displacement to the upside. When the main line crosses the signal line and goes below the zero line, that is displacement to the downside. Here are a few examples of how to find true displacement using the MACD lines. On this diagram, this displacement to the downside did break structure from this swing low right here. However, that is not confirmed on the MACD lines. The zero line is the dotted line here, and the main line does not cross the signal line, and it does not cross below the zero line. Thus, this is a false displacement. Now we see a displacement here where the main line crosses over the signal line and the zero line. This is true displacement, and we can wait for price to return back to a level where we can enter. And we see that happens here. Here is another displacement that is confirmed by the main line crossing the signal line and going below the zero line. This is true displacement. And as price retraces into this fair value gap, we can see a possible entry on the 50% of the fair value gap. As promised, here is an amazing way to use MACD divergence to build a directional bias. Using MACD divergence to build a directional bias. When you are looking on the larger time frames for directional bias, using MACD divergence can help you determine what direction the market is seeking to go. MACD divergence is when the histogram direction is opposite the direction of price. For instance, if price is moving higher and the histogram is moving lower, then there is a divergence. ICT uses his SMT divergence, which is looking at correlated assets that should be moving in the same direction, and looking to see if one asset is moving lower while the other asset is moving higher. The MACD divergence concept is similar and can be used alongside ICT's SMT divergence. Here are some examples of using MACD divergence to build a directional bias. This is on the 5-minute chart. You can see a MACD divergence from this level of price, and looking at the histogram, the bars are going lower. And after that, that's when price goes down. This is from our other example where we saw the fake swing high. This is a daily chart showing you 3 different divergences where you could have looked for entries on the smaller time frames. This divergence happens between this price level and this price level. And if we look at the histogram, there is a complete divergence to the downside. This is a bullish MACD divergence where price is going to the downside, but the histogram is moving to the upside. And right after that, price took off to the upside. And lastly, this movement of price went very far to the upside, while this movement in the MACD histogram stayed level. And after that, eventually price moved to the downside. We hope you enjoyed watching our video. Please like and subscribe for more videos like these. If you have a question or comment, please post it in the comment section below. Thanks for watching.